you better know who you're in the trenches with. You better know that they're going to have a positive, proactive, can do, you know, optimistic, perspective and outlook.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have Julie Holly. Julie, how are you doing today?
I am doing phenomenal. I liked everything in the green room. Like, we're rocking and rolling already.
I love it. Love it. So Julie is a speaker and the founder of Three Keys Investment. And what she does is helps people like you find freedom through multifamily real estate so they can live their life and dreams. And I love that because so many people want to get into real estate, Julie, and we'll probably dive into that, but they do it in a way that doesn't get them to what they were thinking about doing or why they did it in the first place. So, Julie, you've invested in single family homes, house hacked, you name it, managed from thousands of miles away, passively invested in multifamily assets, kind of done it all. You've got a podcast, The Conscientious Investor, and man, a lot of stuff. So Julie, why don't you just give our listeners a bit more about your background and what you're doing today?
Well, it's a little scrappy. I mean, we could go all the way back if we really want to, but it's always like that proverbial continual comeback story, although it's never like behind. But I have three older brothers, so there's always this like, you got to like prove yourself and you got to like, step up and rise to the occasion. So it's interesting. I've been reflecting on this concept, so just cut me off any moment. But it's like I graduated college early, started a career in education at 22, and then pivoted into real estate sales in my mid 20s. And I've done these like interesting pivots along the way that really prepared me to be in the syndication space. And I didn't understand that until I was reflecting, excuse me, with didn't cough the entire time that we were off, not recording. Now I've got something in my throat.
No big deal.
That's how it goes. But it's interesting when you reflect on your journey and where you were and how you got to where you are today. Everything builds on itself. And so I've been looking back at that permission I gave myself along the way, and then living life with my husband for the last going on 17 years now, and just that permission that we've given each other to pivot and iterate so that we could continually grow and transform into who we are today has been really powerful. And that's really brought so much into the syndications that I participate in, because it allows like an outside the box open mind when you aren't concerned about failure, but you're following leading life in curiosity, leading life in diligence, hard work, tenacity, resilience, willing to, look at the challenges ahead as challenges versus, just roadblocks, places to stall out. It just changes everything.
I love that. Love that. Let's dive into your journey a little bit. What were you doing before? What got you into this?
Wow. Okay. So we had, as I said, a background in education. So I was in and out of public school education, in and out of residential real estate sales, actually mostly in it and then out and back into ed. Then I was a stay-at-home mom, homeschool mom, back into public ed. And as I'm like any good real estate investor, it's like tandem timelines of, okay, and we have rentals and I'm managing those rentals and, managing, overhauls on houses and things like that. So it's really interesting. I love that. I was homeschooling our son. Our daughter was too little to be schooled at that point. And it's interesting, like this house is totally torn apart and the roofer is a middle-aged gentleman who looks down at my son, knowing that my son was like in school. Basically, he's like, do well in school because this hurts your body when you get older, right? So some serious life lessons along the way. And then when I was in education, I just felt very vulnerable. Is like, we've got these two awesome kids, and what happens if we have the single family stuff and then somebody, they are delinquent? What happens if, we have a major, these are properties are getting older? What if something happens? It was like,
Yeah.
I just started entertaining the what if monster. Usborne Books, by the way, listeners, has a book called Jonathan and the What If Monster. I highly recommend it. It's a kid's book
Hmm.
that will present a powerful truth to you. Don't entertain what if it is a monster. But I hadn't read that, and I was entertaining the what if monster, and it freaked me out. And I'm like, there has to be a better way to invest. We figured we had reached the peak of the market and that we could capitalize on that, like, let's grab the treasure and then we'll figure out what to do with it. And so then the money's sitting in the bank. I'm a
So
public
you
school.
sold everything.
Yeah,
What?
you sell it, you sit on it. It's just sitting in the bank. And I'm a public school teacher, and I'm like, I loved education, but it's time for I just knew internally, I'm like, it's time for me to exit.
Yeah.
And I can't have this money sitting in the bank, honey. We got to do something. And my husband's like, hey, figure it out. Like, not, hey, you figure it out, I'm late. Like, no, but
Yeah.
he knew,
Yeah.
like, he knows me. He's like, just do your thing and like bring me ideas. And so I'm listening to Bigger Pockets. I was kind of complaining to a friend, lamenting, we'll say lamenting, like, I haven't heard any women since I started listening to this podcast. And then I'm driving up the road to go work out one morning, and Monique Halm, the real estate goddess, she comes on, and this is before she had her platform built out, and she explained syndication. And literally, it's like stars aligned. It was a total God moment for me, because like I have a faith testimony, I have a real estate testimony, and this is like, oh my gosh, this is what I'm supposed to be doing. Syndication is everything I've ever wanted. I get to use my background in education, my heart to serve and support other human beings in bettering their lives. I get to be in real estate, which is, I'm third generation in real estate. So I'm like, this is my happy spot. I love this. It's like the list just went on and on. I was like, and the liability, the risk, like, oh, we'll have like at least a 10-plex. I've never done anything
Yep.
that small. I've never done anything smaller than 68. But like, if we at least have a 10-plex, like, wow, if we had a vacancy, it's no big deal. And we're buying an established business. And this makes so much sense. Like, we can mitigate so much risk. We're like, have a business plan that goes along with this. It felt so good. So you can tell I am still equally as excited
Yeah. Today
today.
you're as excited as the day you started. Yeah.
It has not faded at all.
That's a lot of
This
it.
is years now.
Well, and that's the way it should be, right? You're still excited for it because you know it works. And now you've been building something, right? You should be more excited about it, quite frankly, because when you started, it was still probably fearful, right? It was like, okay, I'm excited. This is great, but you hadn't proven anything yet. Now you've seen results and you've proven it. So it's even more exciting.
It is. And changing, like, supporting people and building their wealth. It's, I mean, like, having calls with investors where, maybe they have, a substantial amount that they need to place. That's just as important as a person who's like, I don't even know, but I want to build wealth. And I hear the wealthy build wealth through real estate. Tell me more. It's like, it's equally joyful and fun.
Hmm. Why not just do this yourself? Buy that 10-plex or buy the 68 unit or whatever it might be. Why are you raising capital and bringing in investors? What's the reason for that?
Is this on YouTube also? I
Yeah.
didn't check YouTube. Good. Everybody who watches this on YouTube, just watch my head like go back. Like, it was like, oh my gosh, why would I ever want to do this alone? Like, I honestly am like, my husband and I began together. It was
Yeah.
like, I discovered it and I thought, okay, I can wear these hats really well, and you can wear those hats really well, and we're going to do this. And it stalled out like a year of life. It just stalled
Hmm.
out. And honestly, for us, I always lovingly say, like, I fired him from my company. Like, this was like my baby. So that kind of put it, we're not that husband wife couple in syndication. We're husband wife, and we're both in real estate in our own ways, but we have our own companies. That's
Yeah.
great.
Which
But
is
when it
totally fine, by the way. A lot of people think you have to partner with your husband or wife. You don't have to.
being married is way more important than being
Yeah.
business partners. I made a commitment to say I just will leave it at that. But then I started looking at, partnerships and the importance. And honestly, if I really truly say I want to serve and support investors and that I'm putting their best interest at heart, then that means that I need to have partners. I will be the first to admit, like, I can underwrite. I can do the numbers. I can, but it's not my sweet spot. It's not my
Mm,
happy spot. And when people are not operating in their zone of genius, that's where you present risk opportunities. And if I'm bringing in other people's money, other people's capital, I now have a whole different level of responsibility. And in my opinion, that means I need to partner with the best and brightest out there so that I can bring the very best. And so every team that I am partnered into are just all-star investors, absolutely phenomenal. And it's always a very complementary skill set brought to the table. So I can't imagine not one, you go slower, it'll slow you down. You're gonna, it's like watching paint dry. I always jokingly say you might want to rip your face off a few times because it's not something that you love. And so it's not going to bring out the best in you. And it's going to protect and mitigate the risk for your investors, the residents, and therefore communities.
so for somebody who's like, I really resonate. I want to raise capital. I know I can. I've got a lot of investors or potential investors. They're really, have a place that they want to put their money. I want to serve these folks. Let's talk a little bit about that. Because there's a lot to it, right? It's not just raising money. And so many people think that's all it's about. It's just, you're raising money for deals. It's a lot more. You're serving these people. It's a big responsibility, quite frankly. Um, how do you choose? Like maybe it's a big answer to this question, but so we don't need to dive into everything. But how do you choose the right partners? And how do you make sure you're not having too many partners or too few partners, maybe both?
Okay, super important question. I actually recorded a podcast episode about this, and I speak about it often on the Conscious Investor podcast because I'm just going to say it, and I'm not going to candy coat any of this. There are too many people that are out there and they're just like, I just want to get in a deal, and I just want to get in a deal, and so let me just get in a deal, and we just met at a conference and we're going to be partners, and there we go. It's like that may work. However, you and I have been around long enough to see that that does not always work. And the collateral damage are the investors involved, to say the very least. And so for me, I actually there's even a blog post on this. Like, I do have like when it comes to general partners, the other active investors, so not my limited partners that are coming in as passive investors, that's different, but I do have a criteria there also, because I am creating a culture and I am building something and it's not for everybody. However, on the general partner side, do I know you? Have I known you for at least a year? Do I know what your track record is? Have we broken bread? Those are my three, like, there's where our partnership starts. Sometimes I jokingly tell people, like, oh great, we can start the timer now. Like
Right.
at the beginning of 1 year. But to think that, oh great, I just met this person and I really don't know them. Like, somebody's character matters more. And so oftentimes,
Mm,
if I am at an event, sometimes people will say, actually, I spoke to someone from an event recently. They're like, wow, we didn't even really talk about real estate and what you're up to. I'm like, yeah, I like to talk about people because I want to get to know you. And if there's an alliance there, then the business is going to be easy peasy. But if there's not an alliance, a deeper undercurrent with our philosophy on how to go about how we would even run a business, how we, what's important in life, we probably aren't going to make strong business partners. And we're probably going to have butt some heads. Now, I have business partners with different worldviews than my worldview and things like that. That's fine. But we all have like a baseline that is consistent. And so it's like, I know in one of our partnerships, we've had to face some of the challenges of ground up development. you better know who you're in the trenches with. You better know that they're going to have a positive, proactive, can do, you know, optimistic, perspective and outlook, because there isn't time to be wasted on this complaining and commiserating and boo-hooing. Like, no, we have to be moving forward. Let's figure this out. And so really truly knowing who are you going to be in the trenches with. And if it's all blue skies, great, but it's not going to all be blue skies over the course of 5 years. So you
Yep.
better know the person, and you better say, hey, till exit do us part. Until close of escrow on the other side do us part. We're in this together.
It's so important. You can easily have that real estate conversation, and a lot of people, I mean, we all can say the same thing, right? We all know the statistics, we've read the books, all that kind of stuff. But what's your business philosophy? I think that's so much more valuable, and that's what I try to preach a little bit on this podcast. Is like, look, we can all go and buy real estate. We can be real estate buyers, right? But if you're going to be a good real estate company, yeah, that's exactly what you have to do. You have to create a company, and you have to have a business culture, and you have to truly create a business with systems and processes and philosophies, right? And you can't just go and not buy deals. Like, anybody can buy a deal, but not everybody can run a business successfully. So I think that's so important. And I'm glad you brought that up, with just have a conversation, figure out what they're all about, more than what their thoughts about real estate are. So they're probably going to like it.
Can we also just add, for better or for worse, I'm not as my friend Shame says, I'm not everybody's, the flavor everyone can savor. Or, she has this cute little expression of, like, basically, we're not, everybody isn't going to be best friends with everyone. And so
Yeah.
I want to actually like my partners. I
Mm,
actually want to not avoid a phone call. I don't want to have, like, oh,
yeah.
I'll get to them later. Oh my gosh. Like, if I have that aversion at all to a person on the front end, can you imagine if something's going south, or something, there's a challenge? Like, yes, I mean, I'm going to just throw in there as my little bonus that I think it's important to actually like who you're partnered with.
Yeah. I think that's super important. I always say, can I have a beer? Do I feel like I can just hang out and have a beer with them?
Yeah.
Right. Do I just feel like we could just hang out, whatever, go to a baseball game, go play golf, whatever it is. Like, can we just hang out for a little while and be okay? Like, or is it like, oh, man, I got to hang out with Jim again? Oh boy.
So check
Like,
your list
then I don't
off.
want to partner with that person. Right.
Yes. I love that.
Um, and I like the LP point too that you mentioned, the LP culture. And I think really, if you're going to be a capital raiser, you have to understand that everybody is not for you. And so don't try to go after everybody. Don't try to make everybody your investor. Make sure you understand who your investor avatar is. And that's who you're going to be speaking to. And that's who you're going to attract. And other people are just not going to fit that. And that's okay. Like, they don't need to be your investor. And sometimes it's better that they aren't, even if they're willing to invest $100,000 in your deal, you're like, oh, that's really good. We need that to get this deal. Sometimes it's not worth it to have that, to get that $100,000. So make sure they fit you and your culture.
I'm sure I'm not going to be sure. I will say, I will speak for myself, but there have been two instances where I had a couple of investors that were interested, and you could just sense that their level of trust was not
Hmm.
where it
Yep.
needed to be.
Yep.
And so what that looks like, if you're looking to go into capital raising, what that looks like is you start a conversation and you're answering questions that they have that are normal, natural questions that new investors should have,
Yeah.
or any investor should have, right? But a newer investor is going to ask these questions. And then if you end up right back where you started, that person isn't ready to invest with you.
Yep.
And so you simply just need to say they either need more time, more education on how does this process even work, or they need to you need to develop that relationship together first, so that they have more trust in you and what your capacity and capabilities. And so I literally just say, like, wow, I think that let's sit this one out and let's wait for the
Yes.
next one, because guess what's going to happen if that investor comes into that deal? And I learned this through, things that my grandpa and my dad taught me in real estate. It's like one, I don't mean to say bad because those aren't bad investors, but they said one bad client will cost you more and just take you offline. And so I don't want my time spent babysitting a young investor that took a step prematurely. So if they want to go invest with somebody else, that's fine. But I have other investors that I'm responsible to serve and support. And so
Yep.
I can't have my bandwidth sucked up by one person just because I want another 50 or $100,000.
Yeah, 100%. I've actually, now it hasn't happened very often, but I have essentially fired investors. Like, I'm just not gonna, I'm not gonna have them invest again. And part of it's my fault because I didn't do what you just said on the front end. They were willing to invest in a deal, even though I kind of knew they weren't ready. And I said, okay, but it just comes back to bite you. So, um, we had a coaching call earlier before we hit record. You and I were talking, and it was really good. You gave me some great advice, and I really appreciate that. But I think it's really valuable to talk about the relationships and how you approach your investors, because it's a little bit unique, I would say. As you mentioned, everybody just takes and you're taught to throw that email out there and that does the magic, but you have a different philosophy.
I do very much so. Everything in life is relationships. Our partnerships are relationships. We go to events because we say we want relationships. Really question yourself if you actually are really authentic about that, or if it's just more self-serving. Like, okay, I get my social media pictures and I get to
Mm,
people, or are you actually creating relationships that you're following up with?
yeah.
Admittedly, I have a hard time following up with a lot of those. I have the best intentions. So I'm throwing myself under the bus right now. Like, I get that. I'm going to,
Yeah.
but when it comes to investors, investors are a relationship. They're trusting us. And whether it's a first time 50K investor or it's a repeat investor putting $250,000 or more back into another deal of yours, those investors are doing that because they have a relationship with you. And so I really believe in mutual trust when I speak with investors on our very first conversation, like, hey, this is mutual trust. Like, a lot of times investors on that first call, they'll think that they're interviewing you. And I let investors know, like, this is mutual. Like, we're both looking at each other right now to see if this is the right fit. And it kind of, I don't mean to put them at ill ease or anything, but I want them to know, like, I'm looking at them also to understand, like, are you a fit for our culture? And that means that you have to understand what your culture is and what it is that you're actually building. Are you just building to, like, I just want to do deals? Or are you actually building something and you have your vision clearly, articulated, either it should be written down somewhere. And
Yeah.
so when we look at how I'm going about, I told you, off air, I am in the middle of a raise right now. And it's been easy. It's been authentic. It's been my favorite raise I've ever done. And I bucked the system and I was in a capital raising mastermind. There are a few of them out there and they're all really great. So this is not to disparage any of those things. But oftentimes we are told and conditioned, like, in order to scale, you need to be able to have a webinar, and in 3 days you should be, fully funded, and blah blah blah. And that was the rhetoric. That was what I bought into, and I'm like, okay, that's what I need to. That's what I need to build. But honestly, it's not who I am. I am a very relational driven person. And that's why my investors, I think, are attracted into my ecosystem. And so it's like throwing them an email. They don't even see the email. They don't even open I mean, I get good open rates, but are those really the real accurate ones? We were talking about that. But at the same time, is it eliciting the response I want? So this raise, I threw out the email. I'm like, I'm not doing that. I am going to call and text. I'm going to use the preferred mode of communication. I'm going to reach out and I'm going to get permission first. Hey, I have this deal on the table. I think, I'm not sure where you're at right now, but I want to reach out, wanted to let you know. I kind of, depending on the last conversation I had with the investor, I kind
Sure.
of crafted that message, that voicemail, whatever it was. it's been a phenomenal response because they're seen. And in this day and age of so much noise being thrown at us, and it's in the pretense of being personalized, but it's not, it's just filled in with somebody's name, but actually truly reaching out to people. Um, Even the ones that didn't, want to invest, well, they wanted to invest, they would say, like, I just deployed some capital. I wish I could get into this. They might be saying that, I mean, whatever, but they expressed genuine, sincere gratitude that I reached out. So it didn't burn a bridge, it built the bridge further.
Yeah, built trust and it built that personal connection. I think that's the difference. An email is an email. I can send an email to thousands of people. I just need to craft one email. It's not personal. Even if we put the person's name on it, that's just an automatic thing. And everybody knows that. We just got this email that got sent to the other 2, 3, 4,000, whatever many people are on their list. Like, that's it. But if you get a text message or a phone call, that means it's personal. And even a text message is obviously the simpler one to send because it sends a lot. It's a lot less time. But even that, though, is still personal. You took the time, even if you just copied and pasted, you still took the time to send it directly to that person. And I think that adds a huge element of authenticity, connection, just making them feel like you care. Like they're not just a number.
Yeah. And then, when we think about the culture, if we want to get, so for myself, full transparency, I would like to get for those, great, we're dropping a half million into every deal that you're offering, maybe
Mm,
more than that, right? That's like the horizon,
yep.
500 to 2.5 million, just drop it in, right? Like that'd be,
Yep.
that's the horizon I'd like to aspire to. We can timestamp this right now, put it in a little capsule, and
When are you going to do that by
a
the way?
year from now. Let's do it
A
in
year
20.
from now. Okay,
Okay,
perfect.
but all that to say, like, now I distracted my own mind with my excitement for, but if we want to attract this type of people, we have to know what we're building, what the culture is,
Yeah.
and allowing our investors to understand that. I have full confidence that my investor base right now would have a great time. And this is always on my mind. I'm like, I want to connect my investors because they'll be friends. I can already tell.
Mm,
And I can already tell that we could go down to the Caribbean. And I'm pretty sure most of my investors would enjoy a trip to the Caribbean, and we could all sit with whatever beverage, whatever's under that umbrella in the glass. Everybody would
mm,
be happy and having a really great time. So it's
yeah.
like having even a bigger vision for your investing and the people that you are blessed to have, enter into your ecosystem.
Yeah. We do an investor dinner every year, just kind of a celebration. And it's so much fun bringing all these investors together, the like minds all together. They've invested in the same deals and it's now we've done it a couple of years, 3 years in a row, I think. And, you know, people really appreciate coming to the dinner and meeting people they've met before and having these conversations, and friendships have actually, been created from that. So it's fun. Bringing them down to the Caribbean is a whole nother experience. We haven't done that yet, but
Yes,
that
I like it. Yes.
sounds amazing. That sounds amazing. That's cool. Uh, Julie, where, the market's weird, and it's just on a meeting earlier today, and Warren Buffett, somebody said that during his whatever meeting that they had the other day, they said commercial real estate's going through crazy times. It's going to be a bad place to be, essentially. And so it scares a lot of people, right? People are nervous. Oh, commercial real estate's going to be the worst place. Multifamily's commercial real estate, right? What's your philosophy on what's going on in the market? And maybe not like dig into philosophy so much, but what are you guys doing and how are you reacting, I guess, to it?
Did you see that? Like, ugh, just
Yeah.
whole
Yeah.
philosophy. When you look at the transfer of wealth that took place after the '08, the Great
Mhm.
Recession, and when I look at the investors that I can look back on, we weren't investing in this capacity, but now I can even look back on the residential investors that my husband and I were aware of and such. It's like, holy smokes, they bought right. Okay.
Mhm.
And so our philosophy, like my philosophy, my husband's philosophy, like my partners that I'm partnered with, like buy right in every market. Like
Yep.
it doesn't matter what is going on with the interest rates, the economic cycle, and things like that. What's your minimum? What's your investment criteria? Well, if
Yep.
my minimum investment criteria is I'm going to bring you a 15% IRR projection, let's just throw that out there. If that's always going to be our minimum, we're not going to send you investors anything less than that, then why would that change just because something is shifting in the market? So our investment philosophy is the equalizer. It is the stabilizing factor in that. And while other things might go up and down and turbulent, it's the people that are like, here's my investment philosophy. This is what I'm sticking to. If it fits my buy box because it fits its parameters and I can stress test the heck out of it, and I'm confident that my capital stack is strong and that my numbers are truly reflecting risk mitigation, which means I'm not, planning in that refinance to make it all soft and fluffy. And I'm
Mm.
like looking at, vacancy rates in a very conservative way. What is the worst case scenario? Using that 10% versus the 2-3% comfortable
Right.
zone, right?
Right.
Like really, really having that as your baseline. Now everything else can go up and down, and that's okay. You're going to be buying right. And now you're going to be buying right in every single market. You're going to come out way ahead.
Yeah. Yeah. I think that's so important. Don't change your investing philosophy because of well, don't change your criteria, right? Because of the market necessarily. I mean, it might play a factor into certainly if the economy is getting worse, you might not show quite as much rent increase or something like that. But I think what has gotten a lot of people into potential trouble, we're not seeing a lot of trouble yet, but potential trouble is that rents were going up so fast for so long that they just assumed that, hey, our rents are going to increase by 6, 7, 8%. I've seen plenty of pro formas showing that, and interest rates are going to stay where they're at forever. So,
That
what's
makes
that?
me cringe so much. And when
Isn't
I
that
would
crazy?
see that, it made me cringe,
Yeah.
right? Because it's like I said, and some of my investors have come back to me and said, like, I wanted to invest with you because I've heard you say rents go up and rents go down. They are not one direction. And so like
Mhm.
really, truly being wide eyed about that. The thing about
And
how many people should have bought in 2020 and they
yeah,
didn't because they're like,
yeah,
we don't know.
yeah.
And then we both know people that were, like, it was a good year.
It was a great year. Yeah, definitely. Definitely. Love that. All right. Julia, I got a couple last questions before we wrap up. What's a favorite book that you can recommend to our listeners?
I always say whatever book I'm currently reading, although I'm not going to recommend that one. It's not my favorite book, and I usually have something around me. I would say anything. I read a lot, so listeners just know that I am always reading. I go between personal development and professional development. It's always back and forth, and I might have an audiobook going at the same time as a book that I'm reading in the morning after I read
Hmm.
my Bible. So, so that's a loaded question for me. I
Okay.
will say
Well, what's one that you like over the last couple months that you've read that you really like?
that's a good. Thank you for working with me on that question. I would say I recently read The E Myth. I actually
Oh
listened to
yeah.
the audiobook, and I felt like if I would have read The E Myth revisited like 5 years ago, it would have helped me out so much. And I think that's really relevant. I did not read there are lots of E Myths out there. I did not read the real estate version. I read E Myth revisited. It's a fable. The audiobook is great. But what I think is really important for real estate investors, like who are going in on the active side, is that a lot of times we don't realize we're building an actual business, an actual company. So like these years later, I'm like, oh yeah. So I just thought I was going to go out and work investor relations and raise capital, and that's what I was going to do.
Mhm.
And yeah, so I built out a company. I didn't even know that, right? Like it wasn't on my radar that I was building something so much larger. And so I'm having to, like massage, like go back and refine the business now.
Mm.
And so I would say if you're at the starting blocks or if you're in those early years and you're having that awakening of like, oh, wait, I'm building a company. Like, oh, I built a company. What are best practices? Then listen to the E Myth Revisited. And on the
I
personal development side, listen to Brendon Burchard's High Performance Habits.
Oh, I've not read that one. Okay. I'll have to put that on my list. I recommend E-Myth to a lot of people, especially if they're just getting started in their business. My daughter wants to own a business. She's 13 years old. She is reading the E-Myth right now. So that's just a requirement. I told her I pay her $100 for every book she reads, and then she has to take that $100 and she has to invest it.
I might adopt that philosophy.
It's great. If it motivates her to read a book and she learns something and then she learns how to invest the money, that's a win for everybody, right?
Absolutely.
What's a mistake that you've made and how can you pass your lesson to our listeners?
All right. At the risk of sounding hokey, not believing in myself.
Hmm.
So,
So,
and
yeah,
a
go
lot
ahead.
of high performers will do this,
Yeah.
where we walk in such pseudo humility that we actually don't see ourselves for who we are created and designed to be. And so we sell ourselves short all the time and we don't
Hmm.
believe in our full capacity. So this last year has really been a awakening of like really receiving myself and believing like what I'm truly capable of. And it changes everything.
Yeah. Love that. Love that so much. So easy to do as well. Like you said, um, it's easy to not to truly believe in yourself or like just lose faith. There's so many things that happen on a daily basis. I think that's for everybody, entrepreneurs, but everybody too. So, but it's so valuable. Last question. What are your 3 pillars of wealth creation?
Love this. I love that you like warned me about this and I'm like, I've got this.
Softball.
Thank you. The Conscious Investor. We actually had a in-person growth day in March of the year of this recording, and there are 3 pillars that I believe in. We have to start with our health because there's no sense in building anything if you don't have the health to
Mm,
enjoy it, appreciate it, or sustain it. We have to, be investing in our mindset because going back to believing in ourselves, if our thinking is cloudy in any regard, if we don't have a clear mind, and to me that is very strongly based in faith as well as just and mindset practices.
yeah.
And then the third one then goes into the financial wealth building. Great, we've got those two pillars taken care of. Boom, let's go get the money, let's go build the money, let's build the wealth. And then wealth looks every way, shape, and form, but you're not going to have wealth if you're not capable physically in some capacity and mentally.
I like that you ordered them, right? Because you're so right. We can have the financial, but if you don't have the two, the financial is probably just going to go away or not mean anything, right?
You're going to end up empty, void, like
Yeah.
your heart will still be hurting. And so the
Yeah.
wealth has to start. And so taking care of our bodies, it's easy. And admittedly, I can sometimes procrastinate and be like, oh, I'll go do that later. I'll briefly state like I'm a very avid mountain biker. I love getting dirty out there and I love adrenaline and I like near death experiences. You feel so alive and I just love it. But last season, I did not bike as much as I had in the previous 3 seasons. Right. And I made a commitment to myself. I'm like, okay, that's fine. I can't sustain not having that type of adrenaline and fun in my life. That's important to me. And so I need to reincorporate that. So it's been a better season already.
Awesome. Julie, really appreciate it. Listeners can check out the Conscious Investor. Where else can they reach out to you?
Yeah. You can connect up on LinkedIn or send me an email, julie@julieholly.com. I'm not scary, and Todd and I are not just voices that you're hearing or faces that you're seeing over, on YouTube and the podcast. Like, make sure you reach out to us. We're both
Yeah.
podcasters. We're here to serve you and connecting, with listeners. I don't know about you, but it's my favorite thing in the world. Knowing that we get to have, we get to support people is just makes my day.
Yeah, it's funny because I would listen to podcasts and you hesitate to reach out to the host, you hesitate to reach out to the guest, but that's most people that are on a podcast, they go on there and they give you the information because they're happy to connect with you. So, connect with Julie, learn about what she's got going on. You have a conversation with her. 'Cause that's why she came on the podcast, because she wants to make more connections. So, Julie, again, really appreciate you joining us. And it's been a lot of fun. And you have a fantastic rest of the day.
Thank you. Loved it. Thanks so much, Todd.
Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out. And we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.